Hey, I want to jump in and talk really quick about location in commercial real estate. And so it feeds into everything about commercial real estate. Let's just talk about a few things in location, why it's so important, because it really drives project value as a whole, right? One, because you got to understand it. It's more from an understanding standpoint, because the reality is that no matter the location, if you position it right, it's how you look at supply and demand. So here's a few factors to look at when it comes to assessing a location for commercial real estate. One is visibility and accessibility. And so that is so important. Retail, different reasons for different things, where it doesn't have to be visible, correct? But retail would be if it's not visible, right? So it needs to be in a place where it can be accessed and can be used. And in retail, it's not just about looking it up or looking for where something's located. Often riding by it, gets your attention and say, okay, I need to stop there. Or it becomes a seed in your head. Now you know where it's at. So location of the property is so important. Visibility, easy access when it comes to retail. There is a reason why that Kentucky Fried Chicken and Popeyes is on the going home side of the road. What's the use of being on the morning side when they're not open, right? You don't want to be on that side of the road. And thus, a breakfast restaurant is placed on the going to work side of the road, right? So there's a method to the madness, so understand that that's important. Proximity to key amenities. There is a reason why a grocery store is really considered not only a grocery store, but Walmart, Target are considered anchor stores. They're typically in an area where they start the development. And so people can get in or leave home and have access to grocery stores within a few minutes. And so to the same extent, that's why a rail station is located in a heavy urban area, because you want to be able to move people in and out quicker. High amounts of parking may not be available. So you want to be able to move people in and out. So being accessible to key amenities, grocery stores is important for neighborhoods. Transportation is important for heavy urban area with apartments, right? Next, demographic and targeting audience. So retailers, it's a fact. Retailers know where they want to be. They know who they are targeting. And so demographics, it's data from location. So typically what you'll see is some tracking around 3 to 5 mile radius, drive time, and walking, and specific distance from the center of your target property. So what you'll find is there is a demographic buildup or research that says in this certain mileage, you'll have certain households that are making certain income. And so just understand that that part of the makeup, the target audience, which businesses can serve, is important. So they locate there for a reason. Market demand and competition. So, just like you got CVS, you also got Walgreens. So everybody want a piece of the market. So that's often why you see on one corner, you see a CVS, on the other corner or just down the street is Walgreens. And I was thinking ahead. And then to the same extent, Dollar General is often right down the street from Family Dollar. And it's just one of those things. So everybody competing for the same demand in the market. And then we talked about zoning and regulation module in one of our videos here, so make sure you check that out. Zoning regulations determine kind of what goes on in a neighborhood, what is allowed there, where is retail, where is office, where is hotels, industrial buildings. And so understand that zoning regulations make up location, and it determines the location and what you can do in the area. Market trends, we talk about market demands, but market trends. What's growing? Who wants to be there? Market conditions. That's all has a lot to do with location, right? So real estate investors, they want to get in there. Where's the money being spent at? In what type of market? So you may not remember, but here's the thing that's important is that every type of commercial real estate is not good for every market, nor is it good for every city. Each one is different. So you might have industrial property extremely in high demand in one city, and it may not be just 20 miles down the road in another city. So keep that in mind. Marketing trends matter. Investors really need to adapt to changing conditions. The market's going to change. So you got to be both macro, which is nationally, jobs market, corporations invest, and then locally, especially if a company is closing and a area has a big loss in jobs. Well, I don't care if the market is doing good nationally, it may not be doing good locally. So that's important, and that helps determine location, whether you should even choose that location, and it's based on the current market trends. Next is future growth and development. What's happening is, are there corporations moving into a city where, okay, we need housing, we need shopping centers, we need all of these things. And so that determines, that future growth, that development that's happening in a city starts to determine if you as an investor want to locate in that area and begin investing, right? People are thinking ahead. You have to be thinking ahead and literally moving forward. So that's so important in location. And I think for this video, I want to split. This is part one. And catch me on part two. Let's finish this up. Thanks.